Hi students, good evening again. Today we are discussing the income statement, and also in the next topics we will discuss the statement of financial position. Okay. Now, first of all, we should understand what is the purpose of the income statement. Okay, and the second name of the income statement is the profit and loss statement, or simply you can say like a profit and loss account, but it is normally considered as the income statement. So what is the purpose of the income statement? Okay, first of all, we will write here the name of the company, the name of the business. So that is the business name is Jarrah and Company. So the income statement is there. So we will write the statement name, and then we will write that for which year, for which financial period it is prepared. So here we are writing it that it is for the period which is ending on 31st of December 2020. Now, the first thing that we should understand why we are preparing the income statement. Income statement is prepared because we want to know that for that specific period, is there income of the business or there is a loss of the business? Means simply, is a profit during that period or the company is bearing a loss that period. So simply to know the profit or loss, we need the income statement. Now, we will just discuss that what is the format of the income statement. First of all, we will write here the net sales. In the income statement, we have two main things are there. First of all, we have a sales, or what we call the revenue, and then we have a cost and the expenses. This income statement we will prepare regarding the trading account. Trading account means any income which is just for the purchasing and selling of the goods. They are not providing any service, they are not manufacturing anything. It is just for the business which is the trading business. So this is for the trading business. So just for the information purpose, for the trading business. So we are preparing this for the trading business. You don't have to write this thing here. It is just for the information purpose. Okay. Now the next thing, we will start from where? We will start with the sales. Or the other name may be the revenue. Now, in the sales or in the revenue, we have to consider two things. First of all, the company or the business has made the sales, and there is possibility sometime there is a sales return also. So we have to consider that how much is the total sale and how much is the total return. Okay, so this is basically the sales or the revenue. So this is the net sale or the net revenue. Now, what is the meaning of the net sales or the net revenue? So the net sale is, so this is the extra information, or what we say like additional information, or even we can call it as a notes. So we will write here information in the notes. So this is the note number 1 where we are calculating the net sales. So net sales is simply the sales amount minus the sales return. We are just assuming the values. Let's say the total sale is 300,000 and 500,000, 5,000 is the return. So it means the total net sale is $295,000. So all these values are in the dollar. So we are just writing this $295,000 here as the next. So what is the purpose of this note? The purpose of note is simply to understand the amount that this sales, how we are calculating. So we can write here like a note number 1. Okay. So the next thing that is very important is what is the concept of cost of goods sold. And the cost of goods sold for which? For the trading business. Obviously there is a cost of goods sold for the manufacturing business also, but it is a bit different, it is a bit complex, so we will discuss that one later on. So we are simply considering the cost of goods sold for what? For the trading business. So from the net sales we have to less cost of goods sold, and it is, let's say, node number 2. Now node number 2. So what is the meaning of the cost of goods sold? Means the trading business is there, they are purchasing the goods and they are selling the goods. So what we have to do, we have to calculate that how much is the cost of those goods which are sold. For that purpose, we have a particular format here. So the cost of goods sold is also called as the CGS. In the CGS, we have like 4 or 5 main items are there, which we will include in the cost of goods sold statement. So the cost of goods sold, first of all, we will write the opening stock. Then we will add the net purchases. So here again we will make the 2 columns. The first column for the calculation purposes or for any information, additional information, and then the amount. Let's say we have a opening stock of 36,000. Now the net purchases. Net purchases is what, that how much we have purchased and is there any purchase return also. So what we have to do, we have to minus the purchase return, and there is a possibility that there is a carriage on purchase. So that carriage on purchase will be added in the net purchases. So how we will calculate the net purchases? It is purchases account, add carriage on purchase and less the purchase return. Okay. Let's say the purchases is 60,000. Okay. Then we have a carriage on purchase, let's say 5,000. So they have purchased the goods worth of what? The purchases of the goods basically. That is 60,000. Then there is a carriage on the purchases. How much is the carriage on purchase? That is 5,000. And then there is some purchase return also. So this will be added and this will be deducted. So it is, for example, 10,000 is there. So here we will write the amount 60,000 plus 5. So it is 65,000 minus 10,000. So the answer is 55,000. So this is the amount of net purchases. So net purchases include 3 things. First of all, the purchase amount, that how many goods are purchased. So the company has purchased almost $60,000 value of goods, and then they have a carriage on purchase. So the carriage on purchase is 5,000. So we are adding the amount of the carriage on purchase, and the next amount is what? We are deducting the purchase return. So we are deducting the amount of 10,000. So 60 plus 5, it is 65 minus 10. So it is almost 55,000. So they had an opening stock of 36,000, and then they have a 55,000 amount in the form of the purchases. So if we add these 2 things, that is called goods available for sale. Means what? Goods available for sale means what? That these are the goods which are available, but they can sell. So how much is the amount here? So that will be 91,000. So the 91,000 is what? That is the goods that are available for the sale. And how we have calculated that one? 36,000 is the value here, plus 55,000 is added here. So the total amount is 95,000. So 95,000 is the goods available for sale. So the business has 36,000 opening balance of the goods, and then they have 55,000 goods purchased during the year. So it means this is total 55,000. So the available balance is 91,000. Let's say now we have to do what? We have to less the closing stock or closing inventory. Let's say the closing inventory is 31,000. So if we less this one, we deduct this one, closing inventory. So this is what, this is cost of goods sold. So it is 60,000. So this 60,000 is the amount which we have to use here in the cost of goods sold. So we will minus here 60,000 as a minus value. So what we are getting? We are getting the gross profit. So 295,000 is there minus 60,000. So we have a $235,000 as the gross profit. So we are discussing here the format. First we have calculated what? We have calculated the net sales. And the value here, the net sales, we have added here in the income statement. Then what we have calculated? We have calculated the cost of goods sold, and the cost of goods sold is 60,000. And how it is calculated? We have added the opening stock or opening purchases value that is available, the opening inventory that is available. Then we have added the net purchases, which has the purchases. Then we have added the carried on the purchases, and we have deducted the purchase return. So the value is 60,000, and then the available balance is there, and closing stock 60,000. Now this is what, this is the gross profit. Now we have to do what? We have to less the other expenses, or what we say, the operating expenses. Now other expenses, what may be the other expenses? So they have sold the goods. Obviously there is not only the expense or the cost of the goods, there are so many other expenses like utility expenses there, salary expenses there may be insurance expense, stationery expense, office expense, cleaning expense, depreciation expense. So many expenses are there. So bad debts are also there. So all the expenses will be written here. Okay, we are just assuming like a 3, 4, 5 main expenses are there, and then after that we will consider that how we will calculate that amount. Let's say in the other expense they have a salaries expense, then the rent expense, then they have, for example, insurance expense, okay. Then there is a carriage on sales is there. Then we have a bad debts. And then let's say we have a depreciation expense. We are assuming that there are like 6 expenses are there. Now these expenses we will write here in the inner column, and the net amount we will write here, and we will deduct it because these are the other expenses. Now these are the expenses, like a salaries expense 5,000, rent expenses 15,000, we have a insurance expense of 12,000, the carriage on sale is 8,000, the bad debt expense 6,000, and the depreciation is 4,000. So these are almost how much? 250. So total amount is 15 and plus 10, this is 20,000, 20, 20, 40, 40, and this is a total amount of 50,000. So expense here is how much? 50,000. Cut from here, and we start from here also. Now we have so many expenses here. For example, we have a salaries expense. How much? 5,000. We have a rent expense 15,000, insurance expense 12,000, carriage on sale is 8,000, the bad debt expense is 6,000, depreciation expense 4,000. So we have total that, and this total is how much? It is almost 50,000. So it is deducted from the gross profit. Then what we have to do? We have to add the other income. Okay. Now, what is the other income? Means this is the main source of the income, that they are purchasing the goods and then they are selling the goods and they are getting the profit or loss from that. This is the main source of the business. But there are some other sources of the income also. For example, they may have deposited the money into the bank account and they are receiving what? They are receiving the interest on that. Or maybe possibility that they have a spare like a space is there and they have rented it out. From that they are getting the rent also. So the rent income may be there. They may have invested some other businesses, and what they are getting, they may be getting some of the dividend income or other resources of the income is there, or there is a possibility that they have received some discount, so the discount is there. So let's say like a 2 or 3 other incomes are there. Let's say for example we say like interest income, and then we have a discount received. We are just assuming like 2 incomes are there. Let's say it is 14,000 and this is 1,000. So the total amount is 15,000. So it will be added. So this is what, this is the net profit, or what we say the net income. So how we will calculate the net profit or the net income? We have a gross profit of 235,000. We will deduct that 50,000 from that, and we will add what? We will add the 15,000 amount in that. So that amount of 200,000, if we calculate, so this is the net income or net profit of that specific period. So this is how we are calculating the income statement. So first is the sales, but the net sales. Then we have the cost of goods sold. Then we have other expenses, other income, other expenses are deducted and other income is added. So what we are getting the net profit or the net income of that specific period. Okay. In the next lecture, in the next videos, what we will discuss a bit detail about what is the meaning of the opening stock, what is the meaning of the closing stock, what is meaning of cost of goods sold, why we are calculating it like a sales or the revenue, what is the difference between the cost and the expenses, and what is the other income. So these things we will discuss in a bit detail in the next lectures. So stay in tune. Thank you very much.